Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the scheduled events for the week beginning April 4th. The week's likely to focus once again on the various central bank speakers. With interest rates in many countries at the lowest levels they've been for all of human history, the market wants to hear frequent updates from central bankers. With the world in uncharted monetary waters, everybody wants to know where the captains think they're headed. There are two major themes in the data coming out this week. One is the final services and composite market PMIs for the EU, UK, US, and China. Normally, these aren't as big a deal as the preliminary figures. Also, the focus is usually on the more cyclical manufacturing indices. Secondly, we get trade figures from Australia, US, Canada, France, Japan, Germany, and the UK. These data really are more important nowadays as an indicator of global economic health than they are for each country's currency. The exception is the UK figures on Friday, because that country's significant trade deficit may be difficult to cover with capital inflows in the run-up to the Brexit vote. The only major central bank meeting this week is the Reserve Bank of Australia meeting on Tuesday. It's widely expected that they'll keep rates on hold for several months more at least. I'll do a separate video on this subject, so I'll just say that the Australian dollar has appreciated since their last meeting, but at the same time, their terms of trade have improved too. It'll be interesting to see if they accept a stronger currency when it's in line with the fundamentals. I expect the statement to be little changed and perhaps for the Australian dollar to firm up a bit on the news. The big surprise would be that if they move to a more dovish tone, that would be where we get a big movement in the Aussie. For the U.S., there are 6 Fed presidents speaking during the day, during the week, at least one a day. The highlight will be a panel discussion on Thursday with Fed Chair Yellen discussing matters with her 3 predecessors, Bernanke, Greenspan, and Volcker. This is the first and probably the last time the 4 of them have ever appeared together. My guess is that the discussions will be more about process than the substance of policy, though. The FOMC also releases the minutes of its March 15th to 16th FOMC meeting, which surprised the market a bit with its dovish tone. I'd think that after Yellen's speech last week, the minutes might not provide much new. It's always possible, though, that the market responds again and again to the same thing. As for the U.S. economic statistics, factory orders on Monday, today, and wholesale inventories on Friday are about it for other market-affecting statistics, aside from the usual weekly data, of course. Factory orders are expected to reverse their recent gains, which could prove slightly negative for the dollar. For the EU, too, ECB speakers will probably be more important than the data. The ECB releases the minutes of its 10th March meeting, where they cut rates again. We'll be able to see just how strong the conviction is that they're done. Some council members have said recently that, in fact, there's still room to lower rates further if necessary. In that regard, watch out for ECB Chief Economist Peter Pryat's speech Monday and the many ECB speakers on Thursday, including President Draghi and Pryat again. There's not that much EU data either. German factory orders on Tuesday and industrial production on Wednesday will tell us more about the German economy, which, in any case, seems to be going relatively well. Bank of Japan Governor Kuroda addresses the Bank of Japan branch managers meeting on Thursday. Will he prepare them for further easing? Stay tuned. Then Canada releases its housing starts and the unemployment rate on Friday. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.